Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This video is going to focus on the ASX 200. I'm also going to have a look at gold, copper and uranium, so make sure you stick around for that. I'm going to leave my coverage of the S&P 500 in a separate video, and I'll leave a link for that in the description section below. As always, this is general commentary, doesn't take your personal situation into account. With all of that said, let's get into our first chart. So we've got the ASX 200 up on the screen, and it's a case of the pullback continues. The pullback that we've been speaking about over the last few weeks has continued on since this time last week when I did my last video. And it's not really a great surprise because, look, this is something that we have spoke about, and it's typical that you get these pullbacks after these strong runs. We had such a strong run in the ASX 200 from the January low through to the high in February, and so far the pullback is looking corrective. It's looking proportional to the run up. I've got the Fibonacci retracement region on here. So the Fibonacci retracement region is using the low point from January and the recent high point in February. And we're now right in the middle of that Fibonacci retracement band. We're also in between the 50-day, the 100-day moving averages. So as it stands, I think this so far looks corrective. If anything, I'd say the ASX 200 is starting to look a little bit stretched on the downside, and we could be nearing a point. We do get a rally. We do get a bounce off this what would really be a support region. Fibonacci's and moving averages often provide support for markets, and you do get rebounds. So I think that's becoming quite a good possibility for the coming week, that we see that sort of activity begin. And we also want to watch the signs of buy the dip for accumulation on the pullback to give us clues as to whether the market will form some sort of a base before having an attempt at breaking above this triple top resistance, which has been in place for some time now at around 7,600. But that's a bit away at the moment. At the moment, it's focusing on what's happening. Is this pullback? Is this indeed a pullback that will establish support, or is it something else? Is it something where the market does continue to roll over and head lower? At this point, they're not the indications that I'm seeing on this chart. But we do, of course, as always, need to watch how the price action unfolds. And as I said last week, I think this could still take time to play out. I think we can be patient in both stocks we buy and also in selling. If stocks are just trading sideways, I don't think there's a hurry to exit them. It's about exiting the stocks which are falling away. But also just waiting for the right setups, waiting for the right opportunities, and not being in a hurry to buy stocks which don't really stack up with the market in this corrective phase. Now let's have a quick look at the ASX equal weighted index. Now this is what we're seeing in the equal weighted index. It's quite similar price action to the recent price action in the ASX 200, in that got to a resistance point at around 1800, been pull back to these moving averages, back to the 100-day moving average. We can also put the Fibonacci's on that last leg of the rally, and again it's back into the Fibonacci region. So this is again, it's where we'd expect buy the dip to come in, if that's going to come in. So that's what we want to look for now. Is this pullback going to find support, accumulation? Is buy the dip going to happen? So let's continue to watch this, and let's see how this price action plays out over the week. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube that people are watching, people are engaging. And YouTube does what it does and goes and shows more people, which helps me heaps. And also come and visit me over at Motion Trader and see the sort of work I'm doing with trend identification and and using algorithms to find stocks amongst the ASX 2000 odd stocks, seeing whether that could help with what you're doing with your portfolio. Now, let's move on to some commodities. So I want to have a quick look at gold. Not a lot has changed from last week in gold. The pullback has continued to gold's continued to lose a little bit of ground. Hasn't actually lost much. It's pretty much moved sideways largely over the last week, sitting on the 100-day moving average. We can also put on some Fibonacci's of that run up from the lows in October, and you can see the gold's come. It's now back up into the upper regions of the Fibonacci pullback zone. So again, very natural place for this to come back to. It's just nothing. I don't think there's anything to be in a hurry about to do with gold at the moment. This was a big rally from the October lows through the highs, 20% in 3 months. It's just going to take time. I think it's going to take time to consolidate, and we just want to wait we want to wait for upward momentum before considering getting into the gold stocks. Just coming over, a quick look at copper. Again, not much change from last week. We have a market which is looks to be consolidating sideways, following a breakout above $4 in January. Maybe it's a case that the market does what it did during November, December, January, through November and December, and just trades sideways in some sort of range. Coming back to these moving averages, the overall picture in copper looks encouraging. It looks like copper could continue to rally from here, but let's just see whether it continues to hold support around $4 and support around the averages. And just lastly, a look at uranium. Last week we were talking about there was some resistance on the uranium chart up at around the 1750 region, and we do have a pullback towards these moving averages. So I think, again, just like with gold and copper and the and the All Ordinaries generally, I don't think there's a hurry to do a whole lot of things at the moment. It's wait for the right opportunity, wait for the breakouts. If you got markets trading just below resistance, it's probably not the ideal setup for buying. It's a case of waiting for those breakouts to break to the top side, hopefully, in uranium, but we need to wait and see. This consolidation, as I spoke about a few weeks ago, uranium could continue to meander through this large range for several more months, many more months. We don't know. Just need to keep monitoring. I think I'll continue to want to play this from the upside, but it's waiting for the breaks, waiting for the right price action. So, one more thing before we go. Just quickly, Bitcoin. Don't usually talk about Bitcoin. It's but nonetheless, it's a market. I know some people are interested in it, and it's one which I do watch, even though I don't really talk about it much. Just interesting from a price action perspective. We had this. You can see these blue lines, that being the resistance, being support. Big trading range. Bitcoin was in from around June 2022. Had a breakdown in November, and you get a breakdown from a trading range, and that can set the market up for another ended leg lower. That didn't happen. And gold, interestingly, gold did something similar in around November. It broke down from a trading range, sat beneath the range, and then popped back up. Bitcoin didn't break down. Instead, it broke back into the range in January. It's now made its way back up towards the top of the range, and it just looks here to be consolidating below resistance. Moving averages are now rising. It's going to be interesting to watch. So this isn't a market which I'm playing, but it's one which, as I say, it's one which I watch. I just like price action. Interesting to see whether Bitcoin breaks above resistance at around 25,000 and goes for another run. So if you're a crypto person, just something to keep an eye on. Keep an eye on that 25,000 sort of region. That's a bit of a resistance point. If it does break there, it could be another run in the cryptos. So anyway, enough said about the crypto market. Hopefully that's been interesting. Let's leave it there for this week. Thank you for joining me. Look forward to coming back and talking to you next week. Until then, bye for now.